What's up YouTube? Welcome back to my channel. For those that don't know me, hi, my name is Miguel. I'm actually building a $100,000 passive income portfolio and showing y'all my journey. Now this is definitely not my normal setup. I did have a lot of camera issues this week, so I'm just using my phone. But nonetheless, we're gonna get it done because right now is the perfect time to be buying stocks. The market is down overall about 15%. There is huge opportunity to buy more shares at a cheaper price, especially the stocks that I love near and dear in my heart. But before we get into that, don't forget to subscribe to the YouTube channel if you have not already. Leave a like on the video because it helps out the growth of my channel tremendously. And let's roll the intro. Portfolio value for the week. So as it currently stands, I'm down overall about 1.3% today, or about $212. On the week, I'm down $238, or about 1.5%. On the month, I'm down $400, or about 2.89%. On the 3 months, I'm actually positive $200, or about 1.74%. On the year, up overall about $1,100, or about 7.64%. And then on the all-time, still up overall $2,200, or about 16.61%. Now, honestly, in the last month, I'm only down about 2%, or about $450, which compared to the rest of the market going down anywhere from 10 to 15%, I'm pretty happy with that. Plus, like I said, all the stocks that I love are on sale right now. Plus, it gives me more opportunity to buy more shares at a cheaper price, which, speaking of, I gotta go over my buys that I did do for this week. Now, going over the buy that I did do this week, I bought Starbucks. I bought $101.58 worth of Starbucks. That ultimately gave me 1.34 shares at an average price of $77.39. And obviously, as we can see, Starbucks is going to be the first stock that I'm consistently buying and that I'm going to continue buying now that the market is down. There are a couple of reasons why I'm focused on Starbucks and why I do believe in them long term, even though they are down right now. But first, let's go into my holding. As you can see, I'm down overall on Starbucks about 13%. I have about 11.34 shares. That makes up about 5% of my entire portfolio. But like I said, the reason why I'm not scared about Starbucks is because they're consistently growing. In fact, they're on track to beat Starbucks and Subway, which are two of the biggest chain restaurants in the entire world. Not only have they opened up a little bit over 1,000 new stores this year alone, but they are projected to grow another 500 to 600 stores next year. But into the reason why they are down right now. And honestly, it's not a bad thing. As we can see, Starbucks is down right now because they are not doing their share buybacks at the moment. Their CEO is just holding this off because there is a strike with Starbucks. Their employees just want to be treated better and have better pay, which is going to be a great thing overall because it's going to bring up the name of Starbucks. So the important thing is that the buybacks are suspended. That doesn't mean that they're not doing it anymore. That just means they're on hold for the moment. So I do believe in the long term, when they continue to open up more stores, they treat their employees right, and they eventually reinstate these share buybacks, it's going to be a no-brainer and Starbucks is going to go up in value. Now, ideally, we would want it to be up right now, but we can't have everything that we want all at once. So that's completely okay. I'm okay being negative on this one, just like I was with Hormel Foods. If you've been following my channel for a while, you know that I was down overall last year with Hormel Foods about 20%. And then just recently, they finally recovered, and now I am positive and getting paid dividends on top of that. So that's my same exact plan with Starbucks. I'm going to continue to dollar cost average in and definitely reap the rewards as soon as they go back up. Now, that brings me to my other buys that I want to do while the market is down right now. I have 3 other stocks on my radar, with the first one being Apple. As you can see, just in the last 3 months, they are down overall about $2, which is about 1.6%. I don't think I really need to go into the fundamentals of Apple. I mean, I'm literally using an Apple phone to record this video. I literally have a MacBook Pro in front of me right now. Not only that, but in the past 5 years, there hasn't been one earnings report where Apple has not beaten their sales projection. They now have a subscription-based service, which is consistent monthly income, and they're just a no-brainer when it comes to investing in a good stock that just so happens to pay a dividend. So with Apple being down, I am definitely trying to take advantage of this in the next week or two to come. Now, the third stock that I definitely want to buy more of, especially with the market being down right now, is Microsoft. They're down overall in the last 3 months about $15, or about 5.33%, which with Microsoft, they haven't been down this bad in a while. It's a great opportunity and a great time to buy in right now, especially for me with my dollar cost average. It was always hard to buy more shares because they were consistently going up over the past year and a half, but now I definitely have an opportunity to buy more shares. But I also think Microsoft is another no-brainer, but I think I'm way more excited about the potential of buying more Microsoft because they are down way more and this really never happens. With Apple, they do go down every once in a while, $1 or $2, but with Microsoft them being down $15, this is a great time to buy in. That's definitely another stock that's going to be on my radar over the next couple of weeks. And the fourth and final stock that's definitely on my radar now that the market is down is Chase Bank. As you can see, not only in the past 3 months are they down, but in the past year they're down about $30, or about 20%. Now, obviously being down 20% in the last year is not ideal, but banks in particular are being hit extremely hard, especially since the pandemic happened. I do believe there's going to be a recovery for banks, and I do believe that Chase Bank is one of the biggest banks in America, at least. So I do believe in them long term. I am not scared about buying more shares of Chase Bank. Obviously, in my financial service sector, they're only one of 3 stocks, and they make up less than 3% of my entire portfolio, which I want to bring that up. I want to have them about 5 or 6% because they are a great banking stock that just so happens to pay a dividend. Now, I've gotten a lot of new subscribers and a lot of new followers on TikTok over the past week. So if you are brand new to the stock market, this is going to be your first test of whether you're in it for the long term or you're in it for the short term. Because again, if you believe in your stocks and you know that you're never going to sell or that you're going to create this passive income portfolio like I'm doing myself, or you just believe in the company in general, this volatility in the market is expected and it's actually welcome for experienced investors. This is because if you're in the stock market long enough, you're going to want to do as little as possible to mess with your average cost. And what helps your average cost is buying the dip, because obviously that's not going to increase your average cost as much. So again, I know I have a lot of beginning investors and I have a lot of new people on my channel. I just want to tell y'all, welcome to the stock market. Especially in the last 2 years, the stock market volatility has been going crazy. But like I said, I'm in it for the long term, and you can see that looking back at my portfolio. There's extreme volatility in my portfolio, and I'm living proof that time in the market is always going to beat trying to time it. Just in the past year alone, my portfolio has fluctuated anywhere from 5 to 10%. And my portfolio was not that big, so it's kind of scary for me because 5 to 10% is anywhere from $600 all the way up to $1,200. But why am I not worried, and why am I going to continue to buy the dip? Like I said, in the grand scheme of things, this little dip is just going to be a little bump on your chart. If we take a look at my portfolio, I was actually negative one time about $100. If I were just sold out of the market there, I would have been down $100 and I wouldn't have been able to grow 20%, because now I am up overall about $2,200 or about 20%. So that's going to be it for today's video. Those are the top 4 stocks that I'm actually looking into buying when the market is down right now. It doesn't even have to be stock related. I also invest in crypto. I also have other alternative savings accounts. Like I talk about all the time, I'm finding unique and different ways to build my APY. Let me know what you guys are buying during this market dip. Are you buying the same thing as I'm buying? Is there other stocks that I should have on my radar that I should be picking up more shares of, or I should open a position in? Let me know in the comments down below. And then don't forget to subscribe to the channel if you have not already. And then lastly, leave a like on the video because it does help my channel grow so much. I appreciate y'all so much, more than you can ever know. But that's it for me this week. I will catch y'all next week. Peace.